Yo, what's going on, everybody? Thursday, June 20th. Check it out. I'm still here in New York City. But I'm leaving tomorrow for Florida. So we had a little pullback in the NASDAQ and the S&P today. The Dow was up, shot up like in the second part of the afternoon for some reason. I'm not exactly sure why. I saw some news stories about Salesforce earnings or something like that, and Chevron. There's been stuff to buy in this market rise. You know, I think I mentioned the banks, energies. They haven't participated as much as, you know, the focus on these AI tech stocks. Nvidia was down today. By the way, Nvidia right now, the market cap of Nvidia is larger than the stock markets of Germany, France, and the UK, and it's getting close to surpassing the GDP of California. I think California GDP is something like almost 3.5 trillion, 3.46. I mean, we're right there, close, Nvidia. Now, that's not analysis when I tell you that. I'm just telling you that to give some perspective on how big that stock has become, how much it has moved. But again, that's not analysis. And actually, when you look at the PE, the forward PE of Nvidia, I think it's something like 52. For a growth stock that is unquestionably the leader in its area right now, by far, which is the AI chips. A 52 PE for a growth stock, a company that big with so much potential, that's not really expensive on a valuation basis, okay? I mean, that really puts it where the price is right now. It really makes it cheaper on a valuation basis than where it was last year. So take that and think it over. I don't know. That's not a recommendation for the stock. I mean, I like to buy stocks when they come down, when investors sell them. You know, lately I've been more active in energies and the big banks and home builders. By the way, the housing starts today, the release of that data, 1.28 million units annually. Folks, that is atrocious. That is atrocious. I mean, we are never going to address the housing shortage and high prices and low affordability with that level of housing starts. Every major housing market correction going back 50 years has happened when housing starts have been above 2 million units annually for an extended period of time. And we're talking about a time when the population was much lower than it is right now. I mean, it's 16 years now since the great financial crash, okay, since 2008. And we're still nowhere near the level we were in terms of annual starts. 16 years. I mean, this is a disaster in the making. I mean, all this is going to do is keep people priced out of the housing market. We don't have enough housing stock. The housing stock that exists in this country today is just going to become worn out and dilapidated, and it's going to need refurbishing and renewal. We're not building enough supply. And I don't care what the interest rate is. It makes no difference. If you don't have enough supply, it's just not going to make any difference in terms of affordability. Your prices are, whatever decline in prices we have seen in certain areas, I mean, that's just a little dip. That's not going to last. At 1.28 million, I mean, it's ridiculous. We need to be above 2 million. Probably we need to be like around 3 million housing starts annually for an extended period of time to replenish the housing stock in this country. So if you're out there thinking the market's going to crash, the housing market's going to crash, and prices are going to come down because interest rates, I mean, you just forget it. It's just not going to happen. We got what, like a 330 million population? I mean, in 1972, when it was a 200 million population, we were building 2.4 million housing units annually. 2.4. We're at half that right now with 330 million people. I mean, the numbers are just clear as day. You don't have to be, a genius in math to see that it's not sufficient. It is not enough. So I keep buying these home builder stocks on every dip because they're going to continue to build, and their profits are going to stay steady. They're going to rise. I've said in the past, when you have things like inflation, like rates going up, like things that you may cry and complain about and bitch about and moan, there are ways to take advantage of that, at least to some extent. And if you're not doing that, look, it would be great. I would like nothing more than to see 3 million units, at least 2 million units annually for the next couple of years. I don't like to see homelessness, but it's gonna explode. It's gonna absolutely. If you think homelessness is now in cities like, you got it bad in San Francisco, you have it, other cities where it's bad, it's gonna get 10 times worse, man. I mean, there's just not enough housing in this country for the population. I hate to tell you. I mean, we are the third most populous country on earth, and they're building 1.2 million units a year. In 1972, they were building 2.4 million, but with 130 million less people. I mean, come on. We're in trouble, man. So yeah, I've been buying the home builders, and they're all cheap on a valuation basis, and every time they dip, I just keep adding to it and adding to it and adding to it. Nvidia was down today. I spoke a little bit just a couple of seconds ago about Nvidia. It was not a recommendation when I said it's bigger than the stock markets in Germany and France and the UK, and it's about to surpass the GDP of California. That's not analysis. That's just me giving some color commentary, some perspective on that. That's all. Fiscal flows are strong. Leading flows are strong. You had on Tuesday. Yesterday was a holiday. Tuesday you had a 41 billion leading flow because we had a Social Security payment. That was moved up to Tuesday because Wednesday was a holiday. Leading flows are still very strong, and I don't expect that's not going to change for the rest of this year. We're going to get a new Congress in the election in November. I spoke about next year. See, I give you things like not just quarters in advance. I give you stuff like years in advance. I said a couple of things next year to consider. I even said, like, very long term. I was talking recently about the fact that Social Security may be peaking out right now because I told you guys that my birth year, 1957, was the high point of live births in the United States. There were 4 point something million live births. I'm one of them right here. So I get Social Security. So like that was the peak. Okay, and slowly over the coming years, we might see, if anything, a slowdown in the growth rate of the roles of recipients. And some of us older people, we're going to die off. Hopefully not me anytime soon, but you never know, right? I try to take care of myself. Like I'm an exercise freak. I eat good, but you never know. So that's interesting to me because nobody is talking about that. They're all talking about how we're going to pay for Social Security. You know how you're going to pay for Social Security? People like me dying off. And that's it, right? So I talk about that, but you know, in a more short term, and when I say short term, I'm talking about 2025, next year. We get a new Congress. The Trump tax cuts expire next year. Okay, we don't know if those are going to be renewed. All right, so that's a potential big increase in fiscal drag. All right. You're going to get a slowdown or a reduction in the COLA, the cost of living adjustment for Social Security, disability, military pay, all that stuff, because inflation has come down a little bit. So the increase is not going to be as much. So those fiscal flows are going to, they're going to slow down a little bit next year, and the market's flying high. But this year we're okay. I think we're okay all the way into the end of the year, basically, and you got to buy the dips. I don't think the year-over-year drop. I've been talking about this recently. I've been commenting on the drop in net government transfers, aka the deficit. It's about 200 billion, maybe a little over 200 billion. I'll look at the number tomorrow, but that's not enough to do anything more than what we have already seen, which is a slowdown in economic growth. I think we're going to settle in here around the between 1.5 to 3% growth rate. And that's not bad. I mean, it's not like the 4, 5, and 6% growth rates that we got used to during the COVID era with the massive stimulus. But that's not bad. I mean, the stock market could live with that, no problem. You're going to have a little bit higher unemployment level, stuff like that. You're going to probably have a little bit lower inflation because the growth is slowing down. So it's not recessionary unless that number really drops, which I don't think it will. I think we're going to stabilize right here, about a 250 billion reduction in net government transfers for this year. So that'll translate into, instead of like a 1.7 trillion deficit, maybe we're talking about a 1.45 trillion deficit, something like that. I mean, these are numbers that not long ago, that would be like the end of the world. People would be like going nuts over that, but we've become used to it. But we need those numbers. And by the way, government spending is really dictated by the demand from the non-government. Don't forget, the non-government needs those dollars. If they're going to have to pay taxes, which the government imposes, the government has to supply the dollars to pay those taxes. I mean, people think, that my tax dollar. If you play the game of Monopoly, I've used this analogy many times. Everyone should know the game of Monopoly. We all played it as kids or whatever, even as adults. You cannot play the game until the board distributes the money. Okay, when you spin the dice and you land on chance or community chest and you pick a card and it says pay $75 in tax, you're just giving back some of the money that the game already distributed to you. And, players who are savvy at Monopoly, they know how to maximize the accumulation of that Monopoly money, just like players in the real economy who are savvy, like in business, or they're professionals and they make money. But the money comes from the government putting it in the system. Yeah, we got to give it back because it imposes taxes. But it has to be put into the system, just like the game has to distribute the money first before you can play. And speaking of that money, let me comment a little bit on the U.S. dollar, which you see it just keeps creeping up. And I believe this is a secular trend. I mean, I really think that the dollar is in a bull trend. This belief of de-dollarization really is going to manifest in the rest of the world exchanging dollars for goods and services and assets in the United States. I think right now, the U.S. is a very large oil exporter. I know somebody challenged me on that, but the United States, we do about 10 or 11 million barrels a day of export of oil and petroleum products. Not just crude, but when I combine oil and petroleum products, and we've been as high as 13 million barrels a day. Right now, we're about just under 11 million barrels a day. I mean, it's huge. I mean, Saudi Arabia, and by the way, our production at 13.3 million barrels a day. Right now, we're at 13.2 million barrels a day. That's the biggest in the world, okay? That's bigger than Saudi Arabia. So the exchange of oil and petroleum assets, we see now foreign corporations investing in the United States, either acquiring U.S. companies or building manufacturing plants, that sort of thing. The dollar is going to keep on creeping up, and all these people who think like, oh, they're printing money, and the dollar's going to crash. That's a monetarist wrong understanding, just like they got everything wrong with the rate hikes, okay? Every time the dollar dips down, I buy it. Well, I trade Forex. And Forex for me is the only real trading vehicle, and even now I don't really trade it in and out. I've been accumulating a dollar position by selling currencies. Like I'm short the yen. I've been short for a long time. I'm short the euro. I'm short the Australian dollar. I'm short the British pound. I'm not the Canadian so much because that's oil based to some extent. But I'm short those currencies, and whenever they pop up, I sell them. And I just build a position. So yeah, I've been telling you guys this for a long time. And it just keeps creeping up, and every time they try to knock the dollar down and there's some story like, oh, they're printing money, and look at the deficit, and look at the debt, and and boom, boom, boom. It just starts creeping right back. And the Bank of Japan, remember, I made videos about this when the Bank of Japan intervened last month and the month before when they intervened, and you had a big, the yen shot up, and I'm like, sell it, man, sell it. We're almost back to where it was when they started to intervene, and they intervened big, man. I think it was something like 80 billion or something, and I explained what that is. All right? I explained what that is. And I said it's not going to stop the yen from going down. It's not. So all that was intervention. Basically, all it is a reserve drain. And then what happens? I mean, the banking system continues to function. I'm talking about Japan or in general. So you get a reserve drain. That's what intervention is. But the banking system in the country has to continue to function. So they make loans, and then what happens? Then the Bank of Japan adds reserves again. So it's an exercise in futility. And here's the thing I've always said. What's the point of having a floating currency? Okay, because ostensibly, we all went to the floating currency system because, it allows for more autonomy, fiscal and monetary policy autonomy. What's the point of having a floating currency and then reacting like, oh, we can't let it float, we got to try to keep it? It's stupid. It's just stupid. But I mean, I try to point out this stupidity every single day. Anyway, that's it for today, folks. The last day here in New York for a while anyway. So folks, please like and subscribe if you choose to. I hope you do. I appreciate all of you who have been doing that. It really helps the channel a lot. Thank you very much. I try to help you guys to, if you could just like and subscribe. And also, don't forget, go to my website, pitbulleconomics.com. Check out a 30-day subscription to MMT Trader. I'm the only guy who does this. I use the concepts of MMT to help you to invest and trade profitably and to understand how the monetary system works. So you're not out there like all these people, running around with these wrong ideas. It's crazy. All right? I'll see you. Bye.